Hello and welcome. I'm Shivali. Welcome to salvagespace.com. Time to let go of non-productive assets, moderate moving stock, overabundance stock, and overloads. For some organizations, stock is the most costly speculation they hold. It has become usual for a business to tie 50%, if not more, of its aggregate capital into stock. Sadly, in today's economy, storing a lot of stock has turned out to be an unproductive burden for most organizations. It needs to be comprehended. That stock means expense and danger. The bigger the stock, the greater the expense and danger. Organizations are constantly shocked when they see that their precious stock isn't moving as fast as they had anticipated. It is just an ability to think that when the economy gets tight, shopper spending gets tight. What's the distinction between moderate moving stock, overabundant stock, and overload? Shockingly, for your business, there is no distinction. All manifestations of said stock are depleting your organization's income as opposed to making money. In layman's terms, moderate moving stock, overabundant stock, and overloads all cause an imprint to your business's main concern. Anyway, what is your overabundant stock costing you? Interest? How could you have been able to pay for your stock? Lamentably, the vast majority don't have the capital to purchase their stock altogether and are compelled to borrow. On the off chance that this stock is not sufficiently offering you any kind of income, your expenses are increasing as your interests keep growing. When will you pay this off? And with what capacity? Depending upon the amount of distribution center space your stock uses and to the extent you have it, your expenses to store your stock are much higher than you would have envisioned. A bed is 48 into 40 or 14 square feet. Considering the case of USA, assume that you have a stock of 30 beds, a 53 inches trailer load. Since the normal expense of stock boom space is rupees 400 a square foot every year, you are taking a gander at a month-to-month charge of $160. $1908 yearly. Include your taking care of expenses, which all things considered are $4 every bed touch, which is at least $360 in case you are fortunate. At last, consider the stock that you could be acquiring yet can't because of restrictions on space. Your abundant stock is currently preventing you from obtaining new stock that could really be profiting. Devaluation. Devaluation is maybe the most evident one of your expenses. Are your products that are not offering worth what they were 6 months back? Commonly, the more you sit on your merchandise, the more esteem they lose. Time. What amount of your time would you say you are spending on this abundant stock? Whether you are always pondering what you are going to do with the stock or why it don't offer as you expected, your stock is a diversion. More than misery and anxiety, this overabundance stock is lying up your capital that could be utilized for better speculations. At last, it ought to be accepted that abundant stock can be a business executioner in the event that it is not de-oiled within an efficient way. It smothers a business's efficiency through and through. Stock takes after an item life cycle. It needs to be continually moving. The less development in your stock, the more hazard your business is confronting. For more educational videos, please subscribe to our YouTube channel. We'll be happy to see you as a registered user with www.salvagespace.com. Thank you for watching this video. I'll be meeting you again in the next video.